Good, good evening, the erudite speaker for the day from Bangalore, Mr. Prashant Bhojwani, sir, and also all the delegates. It is indeed a very happy moment for all of us because with the digitization and faceless era in taxation, we have to move on to the new areas of practice within the taxation also. So very compliance areas are now slowly vanishing off, and in this direction to widen our practice prospects, we have to be more industry specific too. We have already done one or two such programs, but this today is very happy day because in sports sector, at least I am attending for the first time as vice chairman of SIRC also. I am doubly happy to be part of this because it is a new subject and the speaker is experienced in this area. The topic for the day is direct tax landscape for the sports sector, including emerging issues. It is one of the most happening sectors, the sports sector across the globe. And we have an erudite resource person for the day, Prashant Bhojwani, sir. I welcome all the delegates and also the speaker. A warm welcome to you, sir. Before handing over the proceedings to the learned speaker, I wish to introduce him very briefly about his experience and exposure and expertise in this field. CA Prashant Bhojwani has close to 2 decades of experience across direct tax specializations, corporate tax, international tax, transaction tax, transfer pricing, personal tax, besides foreign direct investment policy, exchange control and sectoral regulations. This includes advising clients on investment structuring, both inbound and outbound, corporate restructuring, cross-border transactions, business model optimization, mergers, acquisitions, litigations. He focuses on the media and entertainment sector, including sports and digital. Select experience includes setting up of digital business, such as OTT and NFT, structuring sports events and advising the key stakeholders, including players, crew, commercial rights holder, boards, associations. Prashant has been appointed to the National Committee on Media and Entertainment of the CII, Confederation of Indian Industry, between 2015 and 19, and also works with the government on advocacy related to industry issues. With this brief introduction, I once again warmly welcome Prashant ji and request him to take over the proceedings for the day. Over to you, sir. Thank you.
Thank you, Mr. Panaraj, and a very good evening to everybody.
Visible, sir.
Yeah. My screen is visible, Silva?
Yes, sir. Visible, sir.
Okay. Now, what we'll do is over the next couple of hours, we'll discuss a very interesting topic dealing with the sports sector. Now, what we'll do is, to start off, we will have a very brief overview in terms of the sector. What does it comprise of? Who are the key stakeholders? What are the revenue streams? And then we'll, do a deep dive into some of the case studies dealing with the key tax issues. Broadly speaking, the following are the kinds of tournaments or competition. One is, the bilateral tournament, which is essentially between 2 countries. Then we have our domestic tournaments. Example is the Ranji Trophy for cricket. Now, international events is essentially where multiple countries participate. Okay. Now, example is the Cricket World Cup, which is ongoing now. Now, leagues in India over the last 10, 12 years or close to 15 years has really taken off. And there are multiple leagues going on parallelly now. Now, esports and fantasy sports are relatively new. What we will do is we will deal with them separately in the subsequent slides. Now, let's have a look at the key stakeholders in case of sports. Okay, we have the overseas boards. Essentially, these are the boards of other countries which are participating. We have the teams, we have the players, crew. Now, crew would typically include the coach. We have the commercial rights holder. The commercial rights holder is essentially the world governing body for the particular sport. Now, with these kinds of stakeholders involved, some of them will be located in different jurisdictions. Now, this really will add to the complexities from a tax perspective, because we could have a situation where the player is from one country, the event takes place in another country, the commercial rights holders in a third country. It's possible the broadcasters and the advertisers are from other countries. Now, broadcast and advertising and sponsorship are the key revenue sources in the sports sector. Now, moving on to the key revenue streams. So I'll not discuss each of them in detail, but I'll just briefly touch upon some of them which I think are relevant. Broadcast and sponsorship and advertisement, as I mentioned, are probably the largest revenue streams. Now, broadcasting will include television as well as digital. Now we've reached a stage where really digital is catching up with television in terms of the value. Sponsorship would include title sponsorship. Now, when we say title sponsorship for the tournament, it could be an example, could be Tata's were the title sponsors for IPL 2022. It could be venue sponsorship. Now, venue sponsorship is the actual sponsorship at the stadium. Third, we also have the team sponsorship. And lastly, the player endorsements, which are the individual player sponsors. Now, again, advertisement could include digital as well as television. Now, there is also something like image rights for the players, which is essentially the amount which is paid to the players for use of their name, signature, or their personal image, so as to say. Okay. Now, image rights are again catching up in India. It's a very material source of revenue for the players. Now, coming to non-fungible tokens, this is again relatively new concept which has just kicked off over the last couple of years in India. NFTs, as we call it, is essentially created, maintained, or transferred on a blockchain. It could be in the form of a GIF file, a video, or an MP3 player. It is nothing but the ownership of a digital or physical asset. Okay? We'll deal more with NFT as we move on. Now, betting, as you know, in India is not legal, but some of the countries it has been permitted. Example, the US, and it's a big business in those countries. Now, moving on. So, if we look at the global sports sector, the market size is more than 500 billion, and it is expected to grow at 9%. And in the next 4 years, it's supposed to expected to cross 700 billion. Now, in some of the countries, sports sector essentially contributes as much as close to 5% of the GDP. In India, it is far lower. It is less than even 0.5% of the GDP. So that gives a greater opportunity in India, where we are in the phase of moving to a sports culture, the advent of the leagues, there's a greater opportunity in India for sports. And the sports landscape is completely changing on a yearly basis. Now, let's talk about some of the biggest sports leagues in the world. Okay. Among the top 5, we have National Football League, US, that's the American football. They have annual revenues generated from this is about 16 billion. We have the IPL in the top 5 also, where the expected annual revenues is about 10 billion. Now, if we look at IPL is relatively new in this table, and even compared to the other leagues. Like if you look at NFL has started in somewhere in 1920, and currently there are 32 teams. The oldest league, this oldest sports professional league, is the Major League Baseball, which started in the US in 1903. Okay, which again currently has annual revenues of about 10 billion, and about 30 teams participate in that annually. Now, if you look at all these leagues, IPL is relatively new, but still it's made it into the top leagues in the world. Now, moving on to the most valuable sports league teams in the world. You'll see that we again have got the top 5 on the chart on the presentation. This is dominated by NFL and Major League Baseball. Dallas Cowboys, with an valuation of about 8 billion, is the most valuable sports league team in the world. And all of them are essentially fall under NFL or Major League Baseball. Now coming closer to home, IPL. In the recent auction for the media rights, which was held in June 2022, the IPL media rights for 5 years were sold for in excess of 48,000 crores, which was a huge jump compared to the earlier numbers. This included television as well as digital. It included the India rights as well as the overseas rights. Now, the previous auction in 2000 was in 2018, where it was sold in excess of 16,000 crores. So now if we see in a matter of 5 years, there has been a significant increase in the value of the media rights. Now, if we were to compare the per match media rights value, okay, IPL currently stands at 118 crore per match based on the these media right numbers, while NFL stands at 136 crore per match. And these are the only 2 leagues in the world where the media rights per match is in excess of 100 crores. Coming to the valuation of the IPL teams, okay. Currently, Mumbai Indians tops the table, but of course, these values are as on February 2022, which was prior to the media rights auction of June 22. So the values would definitely increase from that date. But still, Mumbai Indians tops the league, and closely followed by Chennai and Calcutta and Lucknow. Now, with the advent of the leagues, there are increased opportunities which are provided to sportsperson, crew. Now, sportsperson who are not part of the Indian cricket team on a regular basis can also have a very active career in sports. Now, the other leagues also in India are doing well. There is traction on the other leagues, but IPL is clearly the largest and the most successful league in India. Okay, recently, the South African cricket board league teams were purchased by all the IPL franchise owners. This shows that the continuing story of the IPL, the teams are expanding overseas. All 6 South African league teams were purchased by the IPL team owners. Some of the 3 IPL teams already own the Caribbean teams also. Now coming to esports. Esports is at a relatively nascent stage in India. The ecosystem for esports is similar to a regular physical sports ecosystem. Now, what is esports? Now, esport is essentially a sport which requires a competitive play, a tournament, and use of skill. Now, we have an electronic device, there is a tournament, and there is an online multiplayer game. In India, currently, there are about 150,000 professional players for esports who invest time and practice. So different teams and individuals play against each other to win titles in a similar way as physical sports. The esports are recognized as professional sports in quite a few countries. To name a few, US, Germany, esports is considered as a professional sport. And esports is also, in fact, part of the Asian Games. Now, in terms of the format for esports, one, it could be a physical format where it is played at stadiums. Second, it could be online. Or third, it could even be based on a platform. Now coming to fantasy sports. So one example of fantasy sports is really Dream 11. Okay, so what happens out here is users create virtual teams with real life sports players who participate in the real world sports event. Okay, so the users essentially emulate the role of a coach or a manager. The virtual team performance is based on the actual statistical performance of players in the real sporting event. For example, depending if you've chosen player A in your team, so what's the runs that he's really scored in his match? Basis the performance of the selected players in the real life sports event, the users win points. Now, in India currently, as far as fantasy sports is concerned, it's largely driven by cricket. About 85% of the revenues are from cricket. Now, this could be either, the fantasy sport could be either free or paid. If it is paid, there is an entry fee. And that entry fee, essentially, there's a platform charge and balance goes into the prize pool, which the users could win based on the selected team, the players in the team. Now, this promotes fan engagement, and it is a far deeper engagement and goes much beyond pure viewership. Because here you need to track performances, you need to have significant knowledge of the game, you need to invest time, you need to strategize to choose the players and how they are performing. You need to make sure what's the trend, what is happening, how is the wicket going to behave. So it's a much deeper engagement for the fans. Now, coming to the trends which are witnessed in the sports sector. Globally, there is an increased private equity level of activity in sports league. NFL and NBL have in fact now permitted and opened the doors for private equity investment in their leagues. Over the last couple of years, there have been major transactions happening at NBA and La Liga, which is the sports, which is the football league in Spain. As far as India is concerned, Gujarat Titans is owned by CVC Capital Partners, which is again a private equity player. So globally, there's a lot of activity from private equity in terms of sports. Now, growth in terms of media right values and sponsorship, this is what we have discussed. We've seen how the values for the media rights for IPL have really exploded over a period of 5 years. Even sponsorship deals are becoming more and more lucrative for the teams and the players. Now coming to NFTs. In terms of NFTs, the action has really picked up over the last 2 years. So what happens is in NFT, let's take the example of NBA. In 2020, the significant moments in NFT history were actually captured in the form of a digital video trading card, and they could be collected and traded by the users. In terms of India, the first sports NFT was created of Dinesh Karthik for his last ball 6 in the March 2018 cricket match, where 5 runs were needed of the last ball and he hit a 6. There was an NFT which was created in 2021 and monetized accordingly. Significant growth in esports, fantasy sports also. Now there is a huge potential for esports and fantasy sports also. Now coming to the importance of technology, with the improved technology, that the level of fan engagement is really getting enhanced for the users. So if I was to summarize, essentially these were the trends which are there for the sports sector over the last year or so. And there's going to be continued action in each of them. In fact, private equity, action has just been picked up. Media rights, we've witnessed how the numbers have gone up. NFT is just the tip of the iceberg right now. And esports and fantasy sports also have a huge potential. Now, moving on to the case studies for where we could discuss the tax issues. Now, the first case study deals with the India event. So a sports event is held in India. As you can see, there are multiple stakeholders who are involved. They could be tax residents of various countries. There are teams which come to India to participate for the event. The players come, the crew. Now, crew will include coach, physician. Then there are overseas match officials who will come. There will be commentators who will be coming to India. Now, it is very important to plan for this complex transactions. Because of the multiple stakeholders, there is an opportunity to optimize on the taxes, but also there is a huge risk. If not planned properly, they could pose significant tax risks for the concerned parties. Now, the key issues which we'll discuss, taxability of the commercial rights holder. Now, the commercial right holder earns revenues from broadcast rights as well as from sponsorship. These are the key streams of revenue. Taxability of the foreign sports person who visit India. Taxability of the teams, the boards. Again, taxability of the trainers, the coach, and the match officials. Now, one would observe that the tax implications and the analysis could be extremely complex depending upon the facts. It is possible that there could be 3 countries involved or even more at a particular point in time. Now, to start with, let's touch upon section 1039. Under section 1039, a specific exemption from income tax can be obtained. This was introduced in 2006. And from 2006 to 2022, there have been only four exemptions which have been, four events which have been exempted. To start with the ICC Champions Trophy and the Commonwealth Games, the ICC World Cup 2011 and the FIFA Under-17 Football World Cup. As per the exemption, the income stream and the amount has to be notified, the payer, the payee, and the particular event for which the exemption is being granted. And there are certain key conditions which are required to be satisfied. One, the income should arise from an international sporting event which is held in India. The event should be approved by the international body regulating the sport. So let's say, for example, football. FIFA is the world body governing the sport. So it has to be approved. The event has to be approved by FIFA. If we talk about cricket, ICC is the world body which governs or regulates cricket. So the event needs to be approved by ICC. There should be more than 2 countries participating. So essentially, this exemption can be obtained for, large international events. Okay. And the specific income stream, amount, payer, payee, and a particular event needs to be notified for the purposes of exemption under 1039. Now let's talk about broadcast rights. The broadcaster will essentially pay the commercial rights holder. When I say commercial rights holder, the commercial rights holder is generally the world governing body which owns the rights for various tournaments. When we talk about football, as I said, it is possible it could be FIFA, because essentially all the rights for football tournaments are controlled by FIFA. Now, in case of cricket, it would be ICC. So the broadcaster makes the payment to the commercial rights holder. The broadcast rights include would be digital, radio, television. The rights would include for live rights, replays, and highlights. The significant value out of the 3 essentially is for the live rights. Replays and highlights, the value is insignificant or negligible, so as to say. Now, the issue here is the taxability of the payment made to the foreign company for live broadcast rights. And the core issue is whether such right constitutes a copyright. Because if it would constitute a copyright, then it would be characterized as royalty and taxable under the domestic tax laws or the relevant tax treaty. Correspondingly, it is also relevant from a withholding tax perspective, because if it is taxable, then the broadcaster will have a withholding tax obligation on such payments. Now, there are quite a few decisions which have held that live rights do not constitute a royalty. Now, let's look at the definition of copyright. The copyright term is not defined in the Income Tax Act. So let's go to the Copyright Act, which defines copyright as exclusive right to reproduce, issue copies, translate, adapt, etc. of a work which is already existing. So the argument out here is live rights or live coverage is not something which is already existing. And hence, live coverage should not have a copyright, and accordingly, it should not be taxable as royalty. Conversely, replays, payments made for replays and highlights should be taxable as royalty, and appropriate withholding tax would have to be, obligation would have to be undertaken. There are few decisions in favor of the taxpayer which has said that payment for live rights are not taxable. That is one. Another point which should be noted is the draft direct tax code when it was released. it specifically included within the definition of royalty payment for live rights, which is currently not part of the Income Tax Act 1961 under section 916. So that's another basis for saying that payment for live rights are not taxable. Now, however, if the recipient has a permanent establishment in India, then such payments for live rights could still be taxable. From broadcast, let's move on to sponsorship. I mean, as I said, broadcast and sponsorship are two real key sources of revenue. In case of sponsorship, the advertiser pays, again, typically the commercial rights holder. The issue is the sponsorship revenue received by the foreign company, whether the same is taxable in India. The sponsorship rights could be title sponsorship, or it could also be venue sponsorship, which is undertaken at the stadium. The banners put up at the stadium where the matches are being held. Now, sponsorship revenue is not for the use of copyright, brand name, and accordingly should not be taxable as royalty, as there is no copyright which is involved. Okay. Now, the payment for sponsorship essentially is for advertising and publicity. Now, merely because the logo of the other party is being used, that does not make it a payment for the copyright. There are few decisions under the treaty which have held in favor of the taxpayer, saying that payment for sponsorship right is for advertising and publicity, and it is not for a copyright, and hence it should not be taxable as royalty. However, if the recipient has a permanent establishment, then this payment would still be taxable as business income. Now, moving on to the Supreme Court's decision in case of Formula One. Formula One is a car racing event which took place in India for 3 years on an annual basis. The event was spread over 3 days. The event took place for 3 days, while Formula One got access to the Buddh International Circuit, where the event took place 2 weeks prior and 1 week after. So to summarize, in a year, 3.5 weeks was where Formula One had access to Buddh International Circuit, which is the venue for the Formula One race. The Supreme Court held that Buddh International Circuit is the permanent establishment for Formula One in India. Now, the relevance for this issue was, in case if Formula One did not have a permanent establishment, it would not be taxable in India. But because it had a permanent establishment in India, it triggered taxability for Formula One, and consequently the payers were required to withhold tax on payments to Formula One. Now, the key observations of the Supreme Court, while coming to this conclusion that the Buddh International Circuit constituted the permanent establishment for Formula One. The event had taken place by conduct of race physically in India. Okay? And the entire income was generated from conduct of the event in India. The Buddh International Circuit is a fixed place where the Grand Prix or the Formula One event really was conducted. Now, this decision has far-reaching implications, okay? And every event, whether sports event or otherwise in India, needs to consider the implications of this decision. Though this decision is based on the specific facts of Formula One, okay? But it has a wider applicability, but the wider applicability to other cases really needs to be evaluated on a case-to-case basis. Let's take an example if we tweak some of the facts. Okay. There is a sports event which is held in India, which is a one-off event. Okay. In this case, it was a recurring event which was held annually. But let's say we have a one-off event in India. The event is not recurring in nature, it is just held once. Then most importantly, the commercial rights holder does not have access or does not control the venue, either before or after or during the event. Because one of the key elements which the Supreme Court went on was the disposal test while constituting that a permanent establishment was constituted in India. Suppose they do not have control. The business is carried on entirely by the commercial rights holder from the foreign company. It is possible that the conclusion would be different. But as I said, the wider applicability of this decision really needs to be evaluated on the facts of each case. Now, moving further, taxability of sportsperson. Under tax treaties, there is a specific article dealing with taxability of sportsperson, which is governed by Article 17 or Article 18. Now, why is there a need for a specific article dealing with taxability of sportsperson? One, the sportsperson are extremely mobile and participate in various countries. Next, the stakes involved are very high. So that's the reason there is a specific article for dealing with taxability of sportsperson. Now, the first time special provisions or rules were introduced for taxability of sportsperson was way back in 1939 under the US-Sweden tax treaty. Now, let us look at the definition of sportsperson. As per the OECD, if we see, the definition is extremely broad. It is not restricted to only the traditional athletes like runners and swimmers, but it extends to golf, cricket, even car races. Now, the income of a sportsperson from his personal activities, which is exercised in India, should be taxable in India. So let's say a sportsperson performs in India, his income related to that event should be taxable in India as per the tax treaties. So what the tax treaties do essentially is, so in any treaty of India with another country would grant the country of performance the right to tax, which in this case is India. So India would be granted the right to tax. Let's say, for example, if it was an outbound event, if the event was in UK, then the right to tax would have gone to the UK. Now, however, the tax treaties do not specify the mode of taxability. So what happens is we have to then refer to the domestic tax law for the manner of taxation. For example, how they would be taxed in India, whether they would be taxed under the normal provisions or are there any special provisions dealing with taxability of sportsperson under the Income Tax Act. If we refer to section 115 BBA, there is a specific mechanism for taxability of non-resident sportspersons. So income of a non-resident sportsperson from participation in game or sport in India, that's the first stream. Second is advertisement, and third is contribution of articles relating to a game or sport in India. Okay. They would be taxable in India at 20% on a gross basis. When you say gross basis, no deduction for expenses. Now, Section 115 BBA was introduced in the Income Tax Act way back in 1939. Now, this is applicable for non-resident sportsperson who are not citizens of India. Okay. Now, taxability under this basis, there are a few things which are really not relevant. So the number of days stay in India is not relevant. So example, if a sports person comes to India, he comes today, plays the match tomorrow, and after the match immediately leaves, he would still be taxable as the number of days are not relevant. Now, whether the payment is made by a resident or a non-resident is also not relevant. Irrespective of who makes the payment, to the extent it pertains to performance in India, it is taxable. Now, let's also look at the taxability of sports associations. Now, income of a non-resident sports association in relation to a game or sport played in India is again taxable at 20% on a gross basis without deduction of expenses. When we say income, the terms or the language in the statute mentions amount guaranteed. So for a sports association, what is mentioned in Section 115 BBA is amount guaranteed is taxable. In this context, a circular is also issued by the CBDT, which says that the guarantee money or the guarantee amount guaranteed is to be considered as income from other sources. It is to be considered under other income article. Okay. So what happens is we evaluate under the tax duty, the taxability of the amount guaranteed. So there is an article for business income and there is also an article for other income. So the CBDT circular says that we have to look at this falls under other income article. And in most cases, the other income article grants the right to the source state to tax. When we say source state, if the event is in India, India would be the source state and accordingly the amount would be taxable in India. Now, another line of argument is, this is just a CBDT circular. It is not binding on the taxpayer. We go by the normal rules for interpreting tax duties. So what we would do is we would look at whether there is a permanent establishment for the non-resident sports person in India. If there is no permanent establishment, we can go under the business income article and say since there is no P, the same should not be taxable. The non-resident sports person as well as the association are not required to file a return of income in India if appropriate taxes have been withheld on such income and there is no other India-sourced income which has been earned by the non-resident sports persons and association. Additionally, the non-resident sports person would be required to obtain an income tax clearance certificate under Section 230 before departing India. Now, this slide essentially summarizes the tax compliance piece for the sports person as well as the non-resident sports association. Here we have quite a few well-known sports persons who are under lens for tax matters. And the reasons, the stakes involved are high, sports persons are extremely mobile, and they participate in multiple countries. Okay. This emphasizes the point that financial planning is extremely relevant for all the stakeholders in the sports industry. One, it also has an impact on the brand adversely because they are high profile people. getting negative publicity impacts their brand value. Now moving on to some of the key decisions on the sports sector. We'll take up PILCOM now. Here the taxpayer is a committee which was formed by the cricket boards of Pakistan, India and Sri Lanka. The relevant event what we are talking about is the World Cup cricket tournament of 1996, which was held in Pakistan, India and Sri Lanka. The issue was withholding tax on payments made to non-resident sports associations. We dealt with section 115 BBA of the Act. Now parallelly there is section 194E, which triggers the withholding obligation in respect of payments referred in section 115 BBA of the Act. So if a payment is made to a non-resident sports association or a sports person, which are covered within the provisions of section 115 BBA, thereafter 194E gets triggered and there is a corresponding withholding tax or TDS obligation for the payer. Now the key observations of the Supreme Court. One, the source of income was playing of matches in India for the cricket boards, for the overseas cricket boards. Their source was the matches which was played in India. Two, section 115 BBA, which we spoke about, emphasizes a connection between the sport played in India and the guarantee amount which is payable to the non-resident sports association. So basically, there is a connection as per the section between the match in India and the amount, guarantee amount which is payable to them. The obligation to deduct tax under 194E is not affected by the relevant tax treaty. So what they are saying, what the court said, that once a payment is to be made to the non-resident sports person, section 194E gets triggered and corresponding TDS has to be done. As far as the non-taxability on the treaty, which we discussed previously, taking the argument that the non-resident does not have a permanent establishment, is not taxable, etc., can be taken by the recipient of income in its own case. But in terms of the payer, cannot take the argument. 194E gets triggered and appropriate withholding has to be done. The court concluded that PILCOM was liable to withhold tax on guarantee fee in respect of payments to the non-resident sports associations for the matches which were held in India. And the treaty argument was kept alive for the cricket boards in their respective, as and when their respective matters. Now moving on to another case. This is a ruling of the authority for advanced ruling in LG's case. Again, it deals with cricket. This is a recent ruling which was pronounced last year. So here we have ICC Development, which is a UAE company formed by ICC. ICC Development, the UAE company, owns and controls the commercial rights in relation to ICC events. Okay? And IDI in turn licensed such commercial rights for India to another group company, which is a Mauritius company. Now, the Mauritius company and LG India entered into an advertising and a marketing and advertising agreement. The marketing and advertisement agreement essentially was for promoting, advertising, marketing, and other commercial rights in connection with the ICC events. So we have three entities here: ICC, we have the Dubai company, and we have the Mauritius company. Okay. Now coming to the key observations of the Authority of Advanced Ruling. The payment made under the marketing and advertising agreement was purely for advertisement and publicity of LG's brand name products, and use of trademark ICC in the advertisement publicity along with LG's India's logo was only incidental. So what happened is we had the LG India's logo, and side by side the ICC trademark was used. The advanced ruling held that this is purely incidental. There is no copyright which is involved. Essentially, the payment is really made is for advertisement and publicity of the products and the brand name. Okay. And this was held not to be royalty under the India-Mauritius tax treaty, as there was no copyright which was involved. Now, in addition to the marketing and advertising agreement, there was also a global partner agreement entered into between the parties. But as there were no questions which were posed before the Authority of Advanced Ruling for payments in respect of this agreement, the Advanced Ruling has not gone into it. And if focus purely on the payments on account of the marketing and advertising agreement. Now, continuing with this case, there was one key differentiation which was brought out, and this was in a way similar to what the PILCOM also said without spelling it out in clear words. And so they compared section 195 and section 194E. So section 195 is applicable on payments made to non-residents, while section 194E is specifically applicable for payments made to non-resident sportsperson and non-resident associations, sports associations. So unlike section 195 of the Income Tax Act, there is no condition in section 194E that such payment should be taxable. So 195, there is a condition for chargeability. So a TDS would be deducted if the corresponding payment is chargeable to tax. What the advanced ruling has said, that this particular condition is missing under 194E. Hence, they concluded for evaluating the withholding tax applicability, one will have to look at section 195 for payments for matches outside of India, and section 194E of the Act for payments for matches in India. Okay. So there were two events essentially in this case. One was the Women's World Cup 2013, which was played entirely in India. Another one was the Cricket World Cup 2011, which was played in India, Sri Lanka, Pakistan, and Bangladesh. The court concluded that from a withholding tax standpoint, LG India is liable to withhold tax under section 194E of the Act for grant of the rights under the marketing and advertisement agreement in respect of the games played in India. So if you look at the first 2013, the entire tournament was played in India. Okay. But if we look at the 2011 event, it was spread out across 4 different countries. So in this case, they held that only proportionate amount would be covered under 115 BBA because it specifically refers to the game or sport played in India. Okay. So if you see the language of section 115 BBA, there's a specific reference that the game or sport is held in India. So the proportion would be the number of games played in India to the total games played in the tournament. So there will be a proration which would have to be done for a particular payment. And if the tournament, like for example, it's played in if there are 10 matches, okay, across 4 countries, and if there are 3 matches in India, then the proportion would be 30% of the total payment. Now, there were 2 other very significant issues also which are required to be evaluated, and the advanced ruling did get into it. Okay, one is whether the Mauritius company is a sports association or an institute under Section 115 BBA. Second, whether the advertising and promotion fees paid under the agreement can be considered as amounts guaranteed for the purposes of Section 115 BBA. Now, both these issues were decided by the Authority for Advanced Rulings against the taxpayer. Okay, but these 2 issues are something which one needs to have a deeper dive, whether they, for example, the first one, whether the Maurice company is a sports association or institution, because the authority went into the fact that this is part of ICC group, and essentially in substance the payments are being received by them. Now second, the reference again is the amount guarantee. Now, whether when we refer to 115 BBA, when we refer to amount guaranteed for an India match, whether can we visualize an advertising or a promotion fee is also being covered by that. Okay, so these are issues which again will come up at an appropriate forum, as this is only an authority of advanced ruling and not binding on all the other taxpayers. Now, the one consequence is once a payment is made, whether it is taxable or not taxable under the treaty, it is the payer is required to withhold tax under 194E. Okay. Thereafter, the payee can claim tax treaty benefits in his case and claim a refund of the TDS. One big issue of a tax liability for the Overseas Sports Association is most of the countries, the Overseas Sports Associations, the key objective is to promote the sport or game. Okay, so they may be having a tax exempt status in their country. So if there is a TDS which is withheld, at least they'll not be able to claim credit in their home country, and then that would be an additional cost for them. Now moving on. So we've dealt with the sports person, we've dealt with the overseas sports associations. Now we come to the coach and the physician and the other support staff who would typically be referred to as the crew. That's one. Second, the taxability for the match officials, commentators would also be similar as the crew. Now, the taxability for the crew and the match officials would depend on several aspects. One, what is the nature of service which is provided? Second, the pay status, whether the payment is made to an individual or it is made to a company. Then the number of days stay in India. How long have they been in India for the particular during the particular relevant year, and the applicable tax treaty provisions for each of them. The relevant treaty articles which needs to be evaluated. One is Article 12 for fees for technical services. Article 15, which deals with independent personal services, which is payment made to to other than employees. Then Article 16, which deals with dependent personal services, which is payments made to individuals who are employees. So in case if the payment is made to an employee, you have to look at Article 16. If the payment is made to individuals for their professional services in their individual capacity, then one needs to look at Article 15 of the relevant tax treaty. Now, Article 15 and Article 16. If a payment, as I said, is made to an individual for the professional services, then it would not be taxable in India if the following conditions are satisfied. If the person does not have a fixed base regularly available to him in India, and his stay in India is less than 90 days in the relevant year. Now, both these conditions are cumulative. Okay. Now, fees for professional services includes payments made for independent activities to professionals. Now, coming to if a payment is made to an employee. The payment made to the employee would not be taxable in India if the following conditions are satisfied. Again, all these conditions are cumulative. Recipient is in India for not exceeding 193 days. The remuneration is paid by or on behalf of the non-resident employer. The remuneration is not borne by the employer's PE in India. When we say not borne by, essentially you should have not claimed it as a tax deductible expenditure. Okay. All these three conditions are cumulative, so each of them need to be satisfied. Once each of them are satisfied, then the crew or the match official would not be taxable for their performance for their services in India. What we discussed in the treaty, in addition to the treaty, we should also explore the short stay exemption for employees under the Income Tax Act. So under the Income Tax Act, there's a short stay exemption where the threshold is lower, which is 90 days. Okay. So the relevant treaty most probably should have a higher threshold. If the crew or the match officials are taxable in India, then there is a whole host of compliances to be undertaken. They are required to file their return of income in India. The payer would be required to undertake the withholding tax obligations, deduct TDS and deposit with the government treasury. Also the income tax clearance certificate which we spoke about. If the crew match officials are taxable in India, then the corresponding requirement for obtaining the income tax clearance certificate from the income tax authorities will also get triggered, and they will have to obtain the income tax clearance certificate before departing from India. Now coming to the domestic payments for sports persons, crew, etc. There was a circular issued by the CBDT specifically in the context of the sports sector in 2008. And following were notified as professional services for TDS applicability under 194J. So this deals specifically with the domestic payment. So if the payment is made to a resident in India, whether he's a sports person, whether he's a coach, whether he's an umpire or a commentator, will be covered by 194J, and TDS at 10% would be applicable, withholding tax at 10%. The sports boards and association. Here we are talking about the Indian. We spoke about the overseas sports boards and associations, but now coming to the Indian sports boards and association. Typically, the sports associations in India are generally incorporated as a society. The key object is to promote and develop the sport. Okay, and they are not-for-profit organizations, and whatever money is earned is plowed back into the development and the promotion of the sport. They generally claim an income tax exemption under Section 11 of the Income Tax Act. For the clause, advancement of any other object of general public utility. So, charitable purpose is defined under Section 215 of the Income Tax Act. And the fourth limb deals with advancement of any other object of general public utility. This is basis a CBTT circular which was issued in 1984, which clarified that promotion of sports and games is considered to be a charitable purpose under the fourth limb of 215, which is the definition of charitable purpose. So basis that, the sports associations are claiming tax exempt status under Section 11. There is a significant litigation on this account for most of the sports associations. For example, whether the revenues from ticket sales are still satisfying the condition, or is it in the nature of a business, commercial activity. There's a fair amount of litigation which is going on. Additionally, what has happened is the Finance Act 2015 has amended the definition of charitable purpose. So under charitable purpose, the object of general public utility has been amended. That definition has been amended. Okay, so one will have to now see whether an activity of trade, commerce, or business is being carried out, and if the activity of trade, commerce, or business is being carried out, then there is an aggregate threshold of 20%. It should not exceed 20% receipts from such activity, etc. Now we are done with case study 1. We can now move to case study 2. Case study 2 essentially deals with Article 17 and Article 18. Article 17.2 and Article 18.2. They are anti-avoidance provisions which were introduced in tax treaties. And let's understand when is this applicable. Okay. So it is applicable in cases when the income from performance accrues not to the sports person but another person. Okay. If we look at this example, we have P, who's the sports person. We have ECO, and we have the India event. The entire income from the India event, which is participation fee of 100, is earned by ECO. So here we have a case where the income from participating in a sports event is earned by ECO. Okay. So accordingly, Article 17.2 or 18.2 would be triggered. Okay. As the income from participation or performance is owned by accrues to another person. Now, there is a background why Article 17.2 and 18.2 was introduced. This was introduced in 1977. So what happened is, let's say prior to this amendment, okay, if we did not have Article 17.2 or 18.2, ECO would plead that they would take a position that they don't have a permanent establishment in India. And since they don't have a permanent establishment in India, it is not taxable on the business income which is earned in India. But with the inclusion of Article 17.2, permanent establishment is not relevant for taxability for ECO. Okay. So this is a brief background of why Article 17.2 was introduced. Okay, because the position the taxpayers would take is no P, and hence it is not taxable in India. Now let's have a look at Article 18.2 of the India-US tax treaty. Where income in respect of activities exercised by an entertainer or an athlete in his capacity as such accrues not to the entertainer or athlete, but to another person, which in this case is ECO, that income of that other person may be taxed in the contracting state in which the activities of the entertainer or athlete are exercised. Accordingly, the income of 100 may be subject to tax in India. Now, if ECO and the sportsperson are related parties, then even transfer pricing provisions would be applicable, and the payment of 60, which is made by ECO to B, the transfer pricing, the arm's length price will have to be justified for that. Event happens in India. Payment of 100 of participation fees is made to ECO. ECO is a tax resident of state R. Okay. Now B is the sports person who is the tax resident of state R. Sorry, ECO is located in state T. So B is engaged by ECO, which is situated in state T. Now, ECO provides these services for participating in a sports event in India. Now we need to look at the taxability for B and for ECO. Now, B, let's look at B first. B is a sports person and participates in a sports event in India. So he would be taxable under Article 17.1. Read with section 115 BBA. So Article 17.1 of the R India tax treaty. And for the mode of taxability, you go to section 115 BBA, will be taxable 20% on a gross basis of his income, which is 60, as he receives 60 from participation fees. Now we go to ECO. ECO would be taxable under Article 17.2 of the T India tax treaty. Okay. Now his income, ECO's income is 100. He's paid 60 as participation fee. So net income of ECO is 40. Annual tax rate would be 40% on its income was 40. Now, ECO would be also required to withhold tax on the payment of 60, which is made to B. Now, coming to the obligations for filing return of income, B is not required to file the return of income as specifically mentioned under section 115 BBA, as appropriate taxes would be withheld. And there is no other India sourced income. But ECO may not be sports associations in this case, and hence ECO would be required to file its return of income in India. Now, internationally, there are two ways in which this situation can be dealt with, okay, depending upon the domestic tax law. One is the way I mentioned it now. Second is what could actually happen is, you can see if the domestic laws permit, you could see through ECO, basically tax the entire 100 in the hands of B. But that is subject to the domestic tax laws permitting it. Now we come to case study 3, which is the last case study. Here we have again a triangular case, and in this we have an event which is held outside India. Mumbai Indians, which is an Indian company, engages Tim David for an IPL tournament. Tim David is a tax resident of Australia, receives participation fee from Mumbai Indians for the IPL tournament which is held in UAE. Now, 2 issues to be evaluated. First, withholding tax obligations of Mumbai Indians on the payment to Tim David. And second, if any taxes have been withheld, then availability of foreign tax credit for Tim David. Now, first thing one needs to see is which is the treaty which has to be applied. Now, the payment is made by Mumbai Indians, which is an Indian company. So, Indian company is making a payment to an Australian recipient, which is Tim David. Hence, the treaty which will be applied by India would be the India-Australia Tax Treaty. As per India-Australia Tax Treaty, the right to tax is given to the country of performance. Now, in this case, the country of performance is UAE and not India, at least not India. So, India ideally should not have the right to tax the participation fee paid to Tim David as long as the event is not held in India. Okay. And this can also be supported by some of the observations of the Supreme Court in Pilcom's case. That's the first part. Now we come to the next, availability of foreign tax credit. Let's say theoretically there have been taxes which are withheld. Then in this case, the sportsperson will have to evaluate the availability of foreign tax credit for such taxes in his home country, which is Australia. For that purpose, you have to see the income is being offered to tax in Australia because he would typically be a resident under the Australian domestic tax laws, and his entire income would be taxable based on his residential status. Okay. And you'll have to look at the foreign tax credit rules and the relevant treaty in terms of whether foreign tax credit could be claimed for such FTC, for such taxes withheld. Now, in terms of UAE currently at least there is no withholding tax. Hence, from a UAE standpoint, there is no withholding tax obligation for the payer. Now, we've dealt with all the case studies, okay, and this is the last slide. So just wanted to share some of my concluding thoughts on the sports sector. One is the stakes involved are high. The profile of the sports person, they are in public limelight, they are high profile. The sports sector stakeholders are constantly under lens. Accordingly, there is a need for appropriate planning and tax risk management. There should be a proper evaluation of the applicability of taxes which needs to be done. Second, you would have seen that there are significant cross-border transactions where multiple stakeholders involved, events held in one country, stakeholders in another country, payer in a third country. And sportsperson typically are mobile and events happen across various countries. Next, we are seeing a major evolution of enhanced monetization avenues. NFTs, which we spoke about. Now, NFTs pose unique tax issues, challenges. Now, India has already introduced taxation of virtual digital assets this year, and this is extremely relevant from NFT perspective, as NFTs are covered within the definition of virtual digital asset. We spoke about fantasy sports. These are new business models evolved over the last few years. The complexities have increased, and over the next few years, complexities will continue to increase with further new things and new business models coming up. Esports and fantasy sports, again, there is a huge focus on the regulatory landscape for esports and fantasy sports. They have huge potential, and if esports is given a recognition to be considered as sports like a lot of other countries, then it can really get a lot of mileage out of it. So I am done with my presentation, whatever I had to share. Now, if there are any questions, I'm happy to take them up.
So I requested audience to post questions if any, and they are allowed option to unmute themselves and post it. We'll wait for 1 or 2 minutes, and
So Silva, are there any questions?
yes, as of now, not in the chat box. I've posted for questions. Any can be posted in the chat box.
Okay.
So we have 70 to 75 people are attending. As of now, we have 52, 53 attending. The question presentation be shared, sir, with your consent. Can this be shared with the audience as a PDF file, sir? The presentation.
Yes, Silva, the presentation can be shared. I will email it to you, and you can share it with the audience.
Yes, Mr. Karan, sir, presentation will be shared. You can drop mail to sarccp@ici.in. We'll share the same. Okay? Maybe on 1 or 2 days time, we'll send to all registered participants.
Sure.
Maybe if there is any question posted, they can mail it to you, right? So, but all the mail ID is shared with the presentation, it seems so. Is there any questions from audience side? And also we have uploaded the assessment for this session under the same dashboard. All the members who attended here, they can attend the assessment to claim the CPE credit.
So Silva, we'll just wait for a couple of minutes if there are questions. Otherwise, then
Yes,
we can close.
Yes, sir. Yes, sir. Our vice chairman also couldn't join at the end. Actually, set up with another meeting. Just want to apologize. So, thank you so much for the time spent here on excellent presentation. We'll wait for some more minutes.
Yes. Silva, there is a message in the chat box that the assessment cannot be seen.
Yes, ma'am. The assessment will be up coming to active after 7 o'clock because the session is scheduled between 5 to 7, right? Post completion of the session only the assessment will be has been made visible to the audience. So post 7 o'clock, you have a time till another 3 to 4 days to complete assessment. Under the same login, under the same dashboard, you can see the assessment, and that can be accessed. So you have 3 days time to complete the assessment, and then we'll be uploading the CPE under your calendar. Thank you. This one has been made mandatory actually for any CPE that is conducted virtually. Sir, can you wait for some more time, or else can you wind up the session, sir?
If you want, we'll give it another couple of minutes.
Yes, we'll have it. Sir. We have time actually. We have 7 o'clock. The mail ID is shared in the presentation there. So if there is any way, they will write it for you.
So I hope all the participants found this session interesting.
Yes. Because this is a specific topic on, as you said at the start. Mail ID, sir, it's given in presentation. Right? So can you just type it in chat box so they can put it there? Yes, sir. Saji, sir, you unmuted yourself. Is there any questions, sir? Some of them unmuted themselves, but